Welcome back. The infra stocks are doing extremely well. We have Titan, which has moved higher as well. And as we are moving towards close, all the stocks that did well yesterday are back in action. M&M has moved to the high point of trade. HUL is doing well. Trent is moving higher. ICICI Bank as well has moved to the high point of trade. So domestic fixing sectors back in play as well. Good time to then welcome our alpha manager of the day, Vaibhav Sanghavi of Ask Hedge Solutions joins in now. Vaibhav, you know, the sector of today has been IT, and the question of the last couple of years has been IT as well. You know, the AI-led disruption, whether this continues, have these stocks priced in enough? Are they at attractive levels? And with the kind of commentary that's coming in from the US, what's the outlook? I mean, have you guys been tempted enough to buy some?
Mangalam, I think our view on IT is that yes, of course, you've seen this sharp reaction purely because there was inherently, quite a lot of participants being short on the whole sector. At the same time, badly beaten, the valuations on face actually looking pretty cheap as compared to your averages. Your free cash flow yield is also pretty attractive. So the probability of that to kind of come up at any of those kind of news is pretty high. Till the time that you get a fresher set of news from the global standpoint, where you start to see again that whether an Anthropic or Claude or OpenAI can do things which can really keep replacing the software services. So I think we may see some amount of bounce back, but eventually we would continue to be away from the sector.
All right, you continue to be away from the sector. What are the sectors that you're positive on right now? The financials are doing well, yes. A lot of people positive on both public, private and NBFCs right now. So you're pecking order in the financial space. And if you could give us some more sectors that you have increasingly found attractive and nibbled in?
Sure. So I think, as you rightly mentioned, financials, after a very long period of time, we are actually turning not only constructive, but pretty bullish, from an overall sector standpoint, which is led by, I think, rightly so, with private banks, NBFCs, and then the other capital marketplace, which may probably be there. So that is something which we really like. Apart from that, we continue to be bullish on the industrial space. Yes, the valuations are looking tad expensive, but probably at every correction is where we will see this sector to continue to kind of keep investing and getting good opportunities there. Lastly, I think we've been consistent in telling that we continue to like the CDMO players, and that's a story we would like, again, from a medium to longer term perspective. And especially within industrials, data center related opportunity. This is something, again, we've been saying for quite a long period of time. The whole supply chain with the data center is something we are very, very keen on.
I see. Makes sense. By the way, look at Map My India. I mean, it's like it's a bummed out name. For the year, by the way, it's down 50%. It's up 8%. I'm not sure if there's anything which is happening, but high was $3,000 and at about 900 odd right now. That's Map My India. The C Info is a listed company name. Paras Defense is continuing to have a phenomenal run. It's nearing the 100% mark for the year so far, 96% on this one. Chempro, which is, of course, previously this is ITD Cementation acquired by Adani's, 80% for the year so far. I mean, it's been quite a year for many of these names coming through. Look at 5-Star Finance, right? Another one which has not done anything for years. The low this year was about 340. Stocks up $200 from there. That is 5-Star Finance, not ITDC. I was talking about CENPRO, the company, which was formerly ITD Cementation, which is the Kolkata-based EPC company. So that was what I was referring to, not ITDC, which is, of course, Tourism Development Corporation. Vaibhav, what else are you really focused on at this point in time?
I think, Prashant, why we are long short fund, and we do look opportunities from both the sides of the spectrum. But I did mention about what we like. What we want to avoid as well is currently we continue to be away from commodities as a space because of where the oil prices have kind of reacted close to about $110 to now about $70. We do think that the base metal prices also will start reflecting, in fact, we are reflecting the overall correction, as well. So we stay away from commodities, probably look at any rise to look for some short opportunities there. In addition to that, I think what we also want to kind of avoid in some ways is probably any sectors which have an exposure to the El Nino effect on the weather as well. So probably anything which is getting adversely impacted on that account is something also we were kind of avoiding. So those are the sectors broadly where we would be positive and negative on as well.
All right, take that point. The other thing is that on MapMy India, there was a leadership change which was announced, and the management joined us here on the channel as well. They've officially appointed Rohan Verma as a joint managing director for a fixed 5-year tenure, and this is something that the street perhaps may be looking at from here on as well.
Rohan Verma was basically the son of the
exactly. So he's the joint MD for the next 5 years to lead GIS growth coming in for
Wasn't
them.
he already the MD? It's been extended.
Must have been extended. Or former CEO Rohan Verma has been now named as the joint MD. So it must have become one of those nomenclature changes that took place. The management joined us here on CNBC TV18 as well. Fairly bullish about the prospects coming along for the company. Obviously, the stock, like you pointed out, has been bombed out. Just to get a few more questions out, Vaibhav, on the consumer space, the debate is discretionary or staples. Staples not having done much, but maybe first quarter onwards, you get the price growth element coming in as well. So share price underperformance and revenue price growth coming in are two factors that will do well for them. Whereas discretionary, obviously, despite the valuations, the long growth tailwind is something that everyone's favoring. So do you have a view here?
Yeah, of course, I think, this quarter at least, we will see a combination of both volume and price growth, especially on the staple side. Having said that, we also need to be a little cognizant of that. What is the effect of the El Nino on the wider rural economy as well? Now, if it's extra strong and we see monsoons relatively weak, then there is a possibility of probably downtrading in terms of the staple universe. So I'm just waiting or bit circumspect and waiting for the weather patterns to kind of flow before taking a very aggressive call on the consumer space. Lastly, on consumer discretionary, we've seen, some jewelry companies, clocking numbers which have been fantastic. But this is where we do think that because of the weakness in the gold prices on an overall basis, probably this quarter you may see great numbers, but it is where probably you will see the valuations, at the elevated levels and probably some amount of deterioration in terms of the growth as well. So probably the spike in the jewelry companies, I'll probably look to kind of book some more profits for the shorter term. And lastly, on autos, continue to post fantastic retail numbers. Will be mired by the higher raw material prices, but medium term looks pretty okay as such.
All right, take that point. Thank you so much, Vaibhav, for joining in and giving us your view on a whole host of stocks and sectors. Wish you good luck for your, investing journey and nibbling into the markets as we go along. So we got some more clarity. Rohan Verma was earlier